Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Well, you have seen the headline, a trader's war room. Well, during such a scenario where markets are very volatile, be it global markets, be it the Indian markets on the back of the Russian and Ukraine war, what a trader should do. Well, I want to start with the video with the quote over here. So if you look at what does not determine who is right, only who is left. And it was written by Bertrand Russell, and it means that the war can be between any countries, between any people, but the one who is left is being surviving. And same goes with the trading as well. Well, in such a scenario where markets are very volatile and you keep up making losses, and even if you are making profits in such a volatile scenario, the ratio to profit to loss is very lower at current point of time, because markets are trending with the gaps and gap down. And I'll show you the data on the Nifty, how the fab has been performing in the context with the gaps. Okay, so here it is very much important how who are left rather than who was right in the decision, be it the Russia, be it the Ukraine, be it the Americans, be it the Indians. It doesn't matter, but the one who are left post the war can live their life in the future. Well, if you look at the second image over here, this is the image during the war. And if you look at the wall over here, it's been with n number of bullets over here. These are your trades. Okay, if there is a loss, if there is a continuous loss in your trading account, this will be a scar to you. Okay, and it is very much important that you save your capital than making more profit at current point of time. And this is very much important when it comes to the traders war room. Sometimes it is more important to save than making the losses and taking unnecessary risk over here. So let's look at the important data over here. What I was saying, if you look at the current, this is the Fab month data. If you look at the open, high, low, close, and if you look at the percentage and points open next day, the difference between open today's open and the previous day's close, if you look at, there were only 2 instances where the opening was less than 50 points. Rest, out of 20 trading sessions, 18 trading sessions where the markets opened with the gap up or gap down of more than 50 points. Okay, so it indicates that the volatility with the gaps is very frequent in the month of. And again, if you look at, it was on the back of the news with the Russian Ukraine war for going for last around 10-12 days. The momentum was very if you look at the start of the Feb series, we had inflation and US interest rate scenario being building up, where the gaps were very frequent. And if you look at the last column, if you look at the volatility over here, we have seen more volatility above 0.5% or 2-3%, 2%, 3%, or an intraday difference between high and low, which was divided by the previous day close. So gives a volatility on a higher percentage scale. So even if you look at the algos which were trading, were unable to make the profits, because if you take a position as per the algo and exit gap up or gap down, you exit your positions. Intraday volatility was so much that the algo was giving in and outs very frequently. So at current point of time, as a trader, I would say it is better to be safe than sorry. Saving your money at current point of time is very important, because if you are let go in 30 to 45 days, such kind of momentum, and there are n number of trades during the year. So I think at certain point of time you need to let go the trades. Even if you look at the volatility, so I could come on to the volatility. So this is the CBOE VIX, which is the volatility index, and if you look at, it has been trading at the higher levels now. If I look at 2020 was an extreme, which where if you look at the pyramid over there, 2020 was something very different. But since then, even if you look at, the volatility has been highest at current point of time. Even if you look at the India VIX over here, the chart, It is been trading at the higher level around 28-29 percentile, which is again the highest level. So volatility I think could remain higher due to this Russia and Ukraine wars. Things are not settling down, and global markets, though it is not much related to us, but if you look at the global markets, US has been being very volatile. We have seen a number of decisions coming. The top piece are coming, or there is other news that one of the city has been captured by Russia, of the Ukraine cities. So there are various news coming in and out, and markets are very relevant. And if you remember, the Monday session, SGX on Friday was near 16,900 plus. Monday it again went down to the lower. We opened the gap down of around 150 200 points. We came back very strongly and ended around 100 points positive. So such kind of volatility would continue to remain into the markets. And as a trader, I think it should be a taking a vacation or a pause from your regular momentum, or you can lower down the risk position sizing. But I believe, let's the thing settle down probably in a week's or in a 2 weeks time, and then the market is all yours. So for a traders, the war room decision should be that this such kind of scenarios, either you lower down your positions or uh, be on a sidelines till the markets or the dust settles down between Russia and Ukraine. When the market settles, there are always an opportunities to trade with the same system. At during these times, each and every algo systems or the systems which you are trading might face some of the losses, because volatility is not a part, or the backtesting for such kind of long volatility was expected. Even if you look at 2020, we haven't seen such kind of gaps for last 18 trading session out of 20. So this is one of the scenario which is going on, and I would say the trader war room decision should be stay away from such kind of markets. Let's the dust settle and back into the markets with the bank. So signing off, Brijesh Bhatia.